Buddy, and welcome to the Daily Energy Markets podcast. It's 10:30 a.m. UAE time, and Brent crude oil is trading a little bit up at $88.22. Not moving much this week would be the sort of general sense of things. Um, let's welcome back to the table Dr. Raad Al-Qadiri, non-resident fellow at the Center for Strategic and International Studies. Raad, are you geopolitical risk analysts now out of a job? There's no such thing anymore called geopolitical risk. It's all gone. You fire 300 projectiles from Iran to Israel and the oil price falls. We're all fired. Getting that one completely and utterly wrong. Geopolitical risk, though, just aside, it's irrelevant now?
No, I don't think it's irrelevant, but I think it's where the market has been for some time. I mean, the market has been in a show me mode. And, when the fears of geopolitical risk are heightened, when there are concerns about physical disruptions to supplies, I think it starts to play in. Arguably, there's still sort of a premium of some sort in the market and some concern. But looking at fundamentals, I think the market thinks that it's well stocked, it's well protected. So in the absence of something that is major, in the absence of something that is really going to take a large number of barrels off the market, then I think that this is a market that's going to remain sanguine. And we saw that with the attacks. I think it was a heightened moment of concern. There were particular concerns about what the Israelis may do in response, but it was a limited Israeli sort of attack on Iran. It didn't go near oil facilities. The Iranians signaled that they wanted the escalation to ease, and I think the market has taken that on board and is back to looking at fundamentals again.
Adi Masirovic, Director, Surrey Clean Energy and Senior Associate at CSIS. What are the fundamentals in this market? I see the fundamentals as Joe Biden telling us this morning he's sending his big bombs as quickly as possible to Ukraine. Is that one of the market fundamentals? What are the fundamentals of this current oil market?
Yeah, I don't think that's got much to do with fundamentals. The real fundamentals, as Raad rightly pointed out, are going back to the macro picture, first of all, and then sort of to counting barrels at the front end. So talking of counting barrels, let's just start sort of bottom up a little, if you allow me. I was checking a market with some traders yesterday. Europe is looking a bit lackluster. For example, Johan Sverdrup is struggling to find homes. Why? Well, European refineries are going through turnarounds. In spite of that, we've got gas oil crack, which is really weak. Gasoline demand, again, is not looking great. We had stats in the US. And we've got gasoline demand down over 10% year on year on this particular week. So that's not looking very clever. We had also this week the PMIs coming from the United States, and they were not very strong. Basically, they fell to 50.9 from 52, I think, plus. And at the same time, now going back to the macro picture, and I think I usually sort of go on about this quite a bit when I come to talk to you, but it's extremely important for the flat price is the inflationary situation. And at the moment, instead of having the sort of light at the end of the tunnel, which I've mentioned a few months ago, which was supportive of the oil price, i.e. Expected drops in the rates of interest. Right now, we're even talking, there is a little bit of talk about even maybe one more hike before we see the light at the end of the tunnel. It's very unlikely. But the inflationary pressures, especially in the United States, are quite well entrenched in the labor market. So inflation's definitely come off, but it's still going to take a while to bring it back to the desired levels, which basically means higher for longer. And inflation, the interest rates, high interest rates and high commodity prices do not mix very well. So that's been putting a lot of pressure on the oil price.
Narendra Taneja, India's leading energy expert. We just had resolution overnight. Indonesia has declared Prabowo Subianto, president-elect after some challenging to the elections there in the world's largest Muslim country. And India now deep in elections, the country with the world's largest Muslim minority population. Some words overnight there. How's the election going, Narendra? What's the outlook? Is it a done deal? You and all your buddies back in power for another 4 years?
Well, if you look around on the ground and the media, it looks like that the Prime Minister Narendra Modi will be back for the third term and with a good majority. We still don't know whether the majority would be of the same size as 2019, but definitely they are forming the next government.
Does the majority, the size of the majority matter to what can be done, or?
Oh, yes, of course. You need a strong majority in parliament if you want to push through certain reforms like privatization of, some oil companies, reforms in the agriculture sector, reforms in the banking sector, which is still largely controlled by the state, and so on. So 70% of economy is still kind of under the government, in the sense that, we still have this, a lot of people still have this, suffer from the socialistic mindset. So I think if BJP returns to power with 2/3 majority, then you're going to see, in fact, massive reforms. So yes, it does matter. Just to quickly on you, that India is the second largest Muslim population country in the world. So we are home to 18% India's population is Muslim. So therefore, to call 230 million people, 270 million people minority is probably is not right. I mean, they are the second largest majority.
Statistics are, ultimately minorities are determined by the
second largest majority. They're the second largest majority.
Yes, yes.
And India is what India is economically, politically, socially, culturally, thanks to everyone, including the Muslims. Their contribution has been tremendous, and India wouldn't have been what India is today without them. So their contribution, and they are our Muslims. They're not from Saudi Arabia or Iran. They're Indian Muslims. We are very proud of them.
And on that point, in terms of the election, obviously we're a week or so into it. It's early enough and clear enough to say that the BJP will get a majority. Is it clear enough to say, as you just articulated, the importance of that supermajority? Is that looking likely?
Well, that's a good question. I mean, supermajority, we'll have to wait and see. The sense that, Congress party seems to be getting some traction, which, as you know, is the majority part, the majority opposition party in the country. They're getting some traction in states in southern part of the country, like Kerala and a few others. And regional parties are getting traction in some southern states and also in the West Bengal. So it's probably too early to say, but one thing it looks like for sure that the BJP will return with comfortable majority. Whether it will be super majority as they are targeting, that's difficult to say at this stage. They're targeting super majority. They want 400 seats in parliament, so which means that that's a very ambitious target. But my sense is that they're going to get comfortable majority, going by the media reports, going by what's happening on the ground, and what seems to be the mood of the people, because people want to, majority of Indian people, especially the young people, they want to see growth, economic growth. And BJP is the party which is very closely identified with expanding India's economy, setting ambitious goals, and promising a developed India by 2047. So that agenda, 2047, India, a developed country by 2047, is getting a lot of traction especially among the young people and women.
Rad, in a somewhat surprising, if you take the general narrative in an election year in the United States, that the sitting administration would do all it can to ensure oil prices, and particularly gasoline prices at the pump, remain as low as possible. But yet, in the last week, we've had Biden impose sanctions back on Venezuela, put more sanctions on Iran, and now putting more weapons back into the Ukrainian theater. These all seem somewhat bullish for oil prices. Your thoughts on that sort of strategy in an election year? Does it translate into being sort of counterintuitive for the Biden administration?
I don't think it's counterintuitive because the devil's in the detail. And I think sort of it's worth looking at sort of on two levels. You know, one is what the headlines are, and the headlines are sort of tighter sanctions, tougher sanctions, or the possibility of escalation in the fighting in Ukraine. And then there's the reality again of U.S. gasoline prices easing in the last week. Signs that sort of you're not going to get a major spike through the summer. Again, as Adi talked about, concerns about how long interest rates are going to remain at this level and the possibility of even a hike, although as he says, that's probably sort of an outlier. And I think, but it's also a case of, saying something and doing something is very different. And that certainly goes to sanctions. So in the case of Venezuela, sort of while the waivers weren't renewed, the license for Chevron was left in place. And that's been sort of critical in terms of increasing Venezuelan production over the past 6 months, I think is seen as critical as stabilizing production and sort of moving forwards. And in the case of Iran, it's about implementation. It's always been about implementation. I mean, sanctions on Iran have been pretty tough. The question has always been, is the US willing to target China directly and willing to increase tension with China? And is it willing to intercede barrels at sea in the Strait, in the Persian Gulf, or indeed sort of further afield and risk something happening in the Straits of Hormuz? So I think it makes for good headlines. It makes for sort of an administration that seems to be taking tough measures, but one that I think politically is covering its backside pretty well. And I think again that what we see in terms of implementation is likely to fall short of the headlines that have gone with some of the recent news.
Adi, are we seeing? And I'm trying to sort of work it out, is where, as we said at the beginning of our session, Brent crude oil is holding above $88 thereabouts. Is that a floor or a ceiling for the coming months, do you think? Are we seeing a consolidation of a floor or a consolidation of a ceiling on Brent as we go into a second half that is apparently going to be tighter? Your thoughts on that?
Well, we're traditionally going into a bit of a doldrums period. I would guess that I think last time on a program I said prices should be around $90 a barrel. So we are somewhere thereabouts in the middle. And this market is really torn apart between these macro things such as interest rates. A lot of people are expecting interest rates drops. As a result, there was a lot of buying into oil, and we went above $90. Interest rate was, in my opinion, the key. I mean, there are a lot of factors, but it was the key factor pushing the price below $90 a barrel.
You mean the fact that the abandonment of the interest rate cuts was seen as bearish?
Yeah. Well, Sean, any commodity, when you store it, it just basically, it doesn't give you dividend. It has a cost. So interest rates are a very important part of that cost. So, it's directly impacting the whole situation, not to mention the impact of the interest rates on the economy. So, obviously low interest rates, the higher sort of economic activity, increasing demand. Now, we haven't mentioned much on in terms of fundamentals, China, since Rad was just talking about China early on. Interestingly enough, we've had some very positive news from China, but the latest figures I saw in terms of imports, they were down about 11, almost 12% year on year in March. So that's a big drop for China. What's happening over there, even though there were quite a few headlines out there saying that China is probably building strategic petroleum reserves over and above what the United States have now. And indeed, I think a couple of analysts out there pointed out that maybe currently China has bigger strategic reserves than the United States of America. Definitely, China has been buying a lot more Russian crude, but I think it's to do with price sensitivity. China has always done it. It's done it for a decade or more. Whenever oil was cheap, they would just buy it and store it. And the government would quite supported, especially because CNOOC is one of the companies that is kind of extended arm of the Chinese government. So overall, I mean, if you look at what China is doing, not particularly bullish, and China is the key. India is very important, but India is nowhere as important in terms of demand as China. You know, if Indian demand increases by extra 5%, we get 150,000 barrels more demand. You know, it's a drop in the ocean. And of course, so far, amazingly enough, Sean, we haven't even mentioned OPEC. What is OPEC going to do after June? They're in a very difficult situation. You know, they've been cutting and cutting and cutting, especially the Saudis, losing a lot of money as a result, and oil prices have not really gone up. So what are they going to do in June is another question.
Narendra, I wanted to ask you, and to pick up on that point that Adi mentioned there, the outlook for China. One of the things you've said in the past, that India's relationship with Russia is so important to maintain that, so that Russia doesn't feel like China's its only friend in the world. And the idea of why is China stockpiling, buying not only a lot of oil, but also a hell of a lot of gold and other commodities and minerals. And some analysis appears to be that it's an anticipation of weakening their currency, so that they have stockpiled the commodities ahead of that. Others say more analysis, maybe more, serious events. Your thoughts on China's stockpiling, particularly gold, but other commodities from an India perspective? Is that concerning, or is it just another day at the office?
Well, 2 points here quickly. I mean, one is that my sense is that China is doing that because they're going for massive internal, political reforms. I mean, economy is no longer kind of their, target number one. Target number one for the Communist Party is to strengthen and ensure that the Chinese Communist Party stay in power for next 100 years. I mean, that's what they say. So that's their priority. And then they're working backward, whatever they need to do. If, for instance, there is turbulence or if there is a rough weather along the way, internally speaking. At the same time, China knows very well the kind of, given their ambitions to be the superpower, overtake the United States, they know it's not going to happen without challenge. So they're going to be headwind, they're going to be challenges. So they're also preparing for that economically, strategically, politically, and militarily above all. At the same time, America has now realized that, look, they have been pushing China too hard into the Russians or into a corner. That's why now they're trying to repair the relationship. American Secretary of State, in fact, arrived in Shanghai just a few hours ago. And if you see his message on Twitter, he's basically saying he's going to talk with his students, thought leaders, businessmen, and everything. So they're trying to kind of, repair in the sense, to take China a little bit away from Russia to the extent possible, as at the same time they do what they try to do. But China is going to play its own game. My sense is a bit too late. India has always said that we will have good relations with Russia, and we will also have good working relations with China. But our good relation with the West, particularly very special relations, would not come at the cost of our relation with Russia or China. So India is not going to fight a war with a Western fight with China. We will basically have a relationship with China based on our national interest. And our national interest is that to maintain harmony, peace at the border, at the same time, try to kind of invest as much possible so that we can emerge as a counterbalance to China, especially in manufacturing. And that has already started happening if you look at number of, Western companies, investments in India. But I think, important thing at the same time to see China, Russia, and Middle East together. If we see them kind of in silos, we will reach to the wrong conclusion. My sense is if President Biden is re-elected, then we are going to see some political stability in the Middle East. And if he's not, then Middle East is going to look very, very different, come January 2025. Because the entire chessboard would start looking very different. Right now, President Biden is playing very well. I mean, in India, for instance, we are very happy with the kind of, diplomatic energy that's going into the Middle East, into China and others, because it seems President Biden's target is Russia and Ukraine. Focus is back now on Ukraine. And that's the agenda of American Secretary of State visit to China. Repair, but at the same time, to see that China plus Russia kind of does emerge as a major bloc against the Western interests, especially in the context of Ukraine. So it's a lot happening. So as I said, but it all depends. My sense is what happens to China, Vietnam, what happens in Russia, Ukraine, and more importantly, what happens to oil price in the Middle East will depend who is going to be in America's next president. Is Biden? We are going to see good progress. If it's not Biden, I think we should be prepared for some kind of a storm.
Rad, just picking up on that, I mean, it's always fun to look at the outcome of the American election. Your thoughts on that analysis, Biden or Trump? I mean, there's a lot of people in the world that would say Biden gets a big F for his management of the Middle East. Your thoughts on Biden versus Trump, and one being Narendra's prediction that a Trump would be very destabilizing for the Middle East. Biden would be the opposite, I suppose.
Well, I think Joe Biden's been pretty destabilizing for the Middle East over the past few months. I think the embrace of Israel in many ways has backfired, in the sense that it's given the US a little bit of influence over the management of Israeli policy, but probably nowhere near as much as it had hoped it would. And as we go into a new phase, and that looks like the attack on Rafah is the test of the Middle East, makes in the Middle East. What will actually matter most is what happens in the region, not necessarily what happens outside of it. And it really does go down to sort of, in many ways, what Benjamin Netanyahu wants to do as he looks to his political future, and arguably sort of his legal future as well. I mean, I think since the beginning of this war, Benjamin Netanyahu's mindset has been a critical element in determining Israeli policy. And it may be the case that we saw a certain amount of restraint from Netanyahu, certainly in terms of the targeting of Iran. And that may be one of those times when the US had a significant influence.
Right,
the Israelis aren't keen. The Israelis aren't keen to take on Iran on their own. And the Americans in this case told them. But look, I think the region seems to think that Trump will be different. And I think there are some in the region who are making a gamble that Trump will be good for them. I think that's a misreading of a Trump administration, and a misreading of the transactionalism that sort of characterizes the Trump administration. But US policy, one way or another of late, has been disruptive. I think it's going to be a matter of degrees.
Let's go to the survey question, which is dealing with the earlier point. The geopolitical risk premium has now been drained out of oil markets. Agree or disagree? At $88 on Brent, that equals no premium. Adi, your thoughts on the flows? We've seen flows of oil, the continuation of obviously the sanctions on Russia, but now with the rearming, or whatever $60 billion translates into the conflict in the Ukraine. Obviously, you're Bosnian, you lived with the nightmare of war in that region that can drag on and on. Do events, this new amount of money, change the equation, have any impact for resolution? Your thoughts on what it means, and ultimately for Russian energy flows. We've seen the Ukrainians target the Russian refining infrastructure recently. Where do you think all this goes as we go into the summer months, fighting season? You're on mute, Adi, sorry.
Interesting thoughts. I definitely don't think that is going to be a massive impact, this change. I think, unfortunately, this war is going to drag on and on until there is some sort of breakthrough or solution, ideally breakthrough on Ukrainian side. The problem is that uncertainty is not good for trading. And I think what we've seen in the last few months has just been the change of balance. And you started talking about flows early in your questions, and I think that's what you're aiming at. When the refineries are being attacked, there's simply more crude oil being sold out. And Russia does have an excess of refining capacity anyway. So the impact is not necessarily that big. And then there is
But it does
obviously-
appeal that one of the changes this year has been that the tightening of sanctions around the dark fleet, or the vessels available to move that oil has been restricted.
Well, it has been, and then there was a lot of oil, and it still is quite a bit of, especially gas oil on the water being unsold due to some banking issues. But the actual exports have not sort of receded. So we've had these waves of more oil on the water until things get sorted out. But as you know, I'm sure Narendra will tell you that Asia is very price elastic. It's very price specific. And once the price falls low enough, there's always a way to find around the sort of financial difficulties. So India is a very good example. We've had a lot of ships waiting out there to be discharged. The problem was financing and banking, but once the prices dropped low enough, somehow a way was found to absorb those barrels. Now, I'm not exactly privy to exactly how they've resolve the problems, but Asia has always been price elastic. Once the price was right, they'll take the barrels. And I've always been of the opinion that Russian oil will continue to flow almost unabated. Yes, it's very hard work for Russians. Yes, they're getting less revenue, but they're getting less revenue primarily because of the delays, of the longer routes, and so on and so forth, with China and India being primary beneficiaries of lower.
And putting more weapons into that theater, given what we've seen the Ukrainians do with a few drones in recent months, bigger weapons doesn't make that more likely or less likely?
They've also received from the United States long-range missiles, by the way, and that has been confirmed by the United States. I saw that only this morning. It certainly, is escalating, but then both sides are escalating in the absence of that extra ammo for the Ukrainians. Russians are preparing an offensive anyway. So this situation is a bit of a stalemate. It's not really going anywhere, and I just don't see any sort of lasting outcome in the short run. I just don't see where it's going to go, other than some sort of military advantage to one side or the other that would push the other side to negotiate.
And meanwhile, all the oil keeps flowing, Narendra. Into Asia. Where is the appetite still there? Is it the price still right for Russian oil to make its way into Indian refineries?
Well, you see, it's all economics. I mean, even if, for instance, look at the oil price, my own sense is that we still have about $8 per barrel geopolitical premium. If you go strictly by demand and supply fundamentals or landscape, I see absolutely no reason for Brent to be more than $80 per barrel. So it's still the geopolitical premium. And there might be some other reasons too, but I think $80 per barrel. But Russian oil, even if the globally crude oil prices go up and therefore Russians demand more money, I don't think that, Indian refiners are going to agree to it easily. Russia needs Indian refiners, and Indian refiners are very happy to buy from them because quality of oil is okay. And by now they have found solution, how to ship it, insurance and everything. They know each other very well. Let's not forget, until very recently, India hardly, imported any oil from Russia. It was used to be less than 2% of our total imports basket. So is now is much more significant. But it all because
there has been challenges, as you had articulated before, about those shippers of the Russian crude being able to get the right insurance and the right documentation, and without that, it was difficult for India to take it.
Well, there are challenges because India's own, shipping fleet is very small. We don't have, many oil tankers, very, very few, in fact. And Russia's own fleet is also rather small. I think about 68 ships, if I remember right. So therefore, they have to depend on international ships registered in, Caribbean, registered in other geographies. So far, our experience is there are many in the West ship owners who are willing to kind of, offer their ships. I mean, they always follow a different route. It's a bit complicated route, but they are available. So tankers are available. Russians can find them, Indian refiners can find them, and they can find them together and bring that to India. So I think they've been able to find ways. Let's not forget, behind the scene, US may have on the rooftop and say, all right, sanctions against Russia and all that. But the US has also realized, US in particular, that if oil prices go beyond a $90 per barrel, then it's not good for the American economy. So they also want to make sure Russian oil continues to flow into global supply system. Because if oil is 90 or more than 90, President Biden is going to find it very difficult to get back to White House. So I think, there's also, Russia knows it, we know it, everybody knows it. If oil prices are kept at the level of $80 per barrel, then chances are President Biden might win. But if oil is more than $90 per barrel, then it's going to be very difficult. And you are based in Dubai, and you must have heard the conspiracy theories we have heard in Delhi, that there are many in the Gulf, they want Trump to win. And one way to help Trump is to keep oil prices high, because that would kind of make life difficult, politically speaking, for President Biden. So there are all kinds of theories. But my sense is that, as far as Russian oil is concerned, whatever the price internationally, but Russia would be probably Indian refiners will cut deals, which would be kind of win-win for both Russians as well as for Indian refiners.
Well, I'm sure there's a lot of reasons why people want higher oil prices, and maybe that's one on the list. The geopolitical risk premium has now been drained out of oil markets. Agree, disagree? Still, a lot of people thinking like you, Narendra, maybe $8, maybe a number of dollars. There's a bit of draining still to be done. Rad Al-Qadiri, as always, awesome to have you on from the US. Adi Imsirovic, or Rad, you're actually in France, are you? I think you are, yes. Adi,
I am in France, yes.
In France, yes, very nice. Adi Imsirovic in London, or Surrey rather, and Narendra Taneja, of course, in India. Best of luck, Narendra, with the rest of that election. Really impressive, always so awe-inspiring to see India manage such an amazing, the large election where everybody's empowered to cast their vote. And that's really, that gives the democracies of the world a lot of hope and optimism for the future. So well done, India. Thank you so much, everybody. Catch up with you all later. Thank you.
Bye.
Bye-bye.